Hold on, because what I'm about to tell you is going to change everything you thought you knew about your Social Security payment. A major reset just went into effect across Social Security retirement, SSI and SSDI programs, and the new payment amounts are finally here. I've been tracking this for weeks, and now that the numbers are official, I need to share this with you immediately. Here's what's happening right now. Millions of Americans are about to see a significant change in their monthly payments, and depending on your specific situation, this could mean more money hitting your account than you've been getting all year. But here's the catch. Not everyone is going to see the same increase, and some people might actually be shocked by what they're now eligible for. Whether you're collecting retirement benefits, receiving SSI because of limited income and resources, or getting SSDI due to disability, this reset affects you differently. The formulas have been recalculated, the income thresholds have shifted, and there are brand new payment tiers that didn't exist before. Some of you watching this are going to fall into categories that qualify you for substantially higher payments, while others need to understand exactly where they stand to avoid any surprises. I'm going to break down every single change, show you the exact dollar amounts for each program, and tell you precisely what you need to do right now to make sure you're getting every penny you deserve. If you want to know your new payment amount and how this reset personally impacts your financial situation, hit that like button right now, and let's get straight into these numbers. All right, let's dive right into what this reset actually means because I want to make sure everyone understands exactly what's happening with their money. When we talk about a reset across Social Security, SSI, and SSDI, we're talking about the annual recalibration that happens every single year to adjust these programs for inflation, updated income thresholds, and changes in the overall economic landscape. This isn't some random event that happens occasionally. This is a systematic update that's designed to keep these benefits aligned with the actual cost of living that Americans are facing right now. But here's the thing that most people don't realize. Each of these three programs operates under completely different rules and formulas, which means the way this reset affects you depends entirely on which program you're receiving benefits from and what your individual circumstances look like. Let's start with Social Security retirement benefits because this is the biggest program and the one that affects the most people watching this video. If you're currently receiving retirement benefits, your monthly payment is based on a calculation that looks at your lifetime earnings history. Specifically, Social Security takes your highest 35 years of earnings, adjusts each year for wage inflation, and then applies a formula to determine what's called your primary insurance amount. That's the baseline number that everything else is calculated from. Now, with this reset, we're seeing adjustments that include the annual cost of living increase, which is designed to help your benefits keep pace with rising prices. But more than that, we're also seeing changes to the maximum taxable earnings cap, which affects how much higher earners can count toward their future benefits. And we're seeing adjustments to the bend points in the benefit formula itself. What does all this mean in actual dollars? For someone who's receiving the average retirement benefit right now, which is sitting somewhere around $1,800 to $1,900 per month, this reset is adding real money to that check. We're talking about increases that could range anywhere from $50 to well over $100 per month depending on your specific benefit amount. That might not sound like life-changing money, but when you multiply that over 12 months, you're looking at $600 to $1,200 extra dollars per year, and over the course of a 10 or 20-year retirement, that compounds into tens of thousands of dollars. For people at the higher end of the benefit scale, those who maxed out their earnings for most of their careers, we're now seeing maximum monthly benefits that exceed $3,600 for someone claiming at full retirement age. That's a substantial amount of money, and it reflects the fact that these individuals paid the maximum into the system throughout their working lives. But there's something else happening with retirement benefits that I think is really important and doesn't get enough attention. If you're still working and haven't claimed your benefits yet, every additional year you work is potentially increasing your future benefit amount. Remember that 35-year calculation I mentioned? If you're currently earning more than you did in one of those earlier years from decades ago, this new year of earnings is going to replace that lower year and push up your average. With wages generally rising over time and the indexing factors being updated with each reset, people who are in their early to mid-60s and still in the workforce might see significant benefit increases by working just 1 or 2 more years. I've run scenarios where someone working 2 additional years at their current salary level sees their monthly benefit jump by $200 or even $300 for the rest of their life. That's the power of understanding how this calculation works and making strategic decisions about when to retire. Now let's shift over to SSI, which is Supplemental Security Income, because this program operates on completely different principles, and the reset here impacts people in very different ways. SSI is a needs-based program, which means it's not about how much you paid into Social Security during your working years. It's about your current financial situation right now. If you have very limited income and very limited resources and you're either over 65, blind, or disabled, you may qualify for SSI regardless of whether you ever worked a day in your life. The federal benefit rate for SSI just got adjusted with this reset, and we're now looking at maximum monthly payments of over $900 for an individual and close to $1,400 for an eligible couple. These are the federal base amounts, but here's where it gets interesting. Many states add their own supplement on top of that federal payment, so depending on where you live, your actual SSI payment could be significantly higher. The reset for SSI also includes critical updates to the income limits and how different types of income are counted against your benefit. SSI has always had incredibly complex rules about what counts as income and what doesn't. Things like the first $20 of unearned income don't count, and the first $65 of earned income plus half of anything above that also gets excluded. These exclusions help people who are receiving SSI and trying to work part-time, or who have small amounts of other income. With this reset, we're seeing clarifications and in some cases adjustments to how certain types of income and support are calculated. For example, if you're living with family members who provide you with food and shelter, SSI has rules about how that in-kind support reduces your benefit. The way those reductions are calculated has been refined with this reset, and for some people, that could mean keeping more of their SSI payment than they were able to before. One of the biggest misconceptions about SSI is that people think they don't qualify because they own a car or have a small amount in the bank. The resource limit for SSI is $2,000 for an individual and $3,000 for a couple. But not everything counts toward that limit. Your home doesn't count. One vehicle doesn't count if it's used for transportation. Household goods and personal effects don't count. Life insurance policies with a face value under $1,500 don't count. A lot of people who desperately need SSI are not applying because they think they have too much in assets when they actually fall well within the limits. If you're struggling financially and you're over 65 or disabled, I cannot stress enough how important it is to look into SSI. That $900+ per month could be the difference between making ends meet and falling into real hardship. Now let's talk about SSDI, which is Social Security Disability Insurance, because this is where I see tremendous confusion about eligibility, payment amounts, and how the reset affects current beneficiaries. SSDI is for people who have a work history with Social Security, meaning they've paid into the system through payroll taxes, but they've become disabled and can no longer work at what's called substantial gainful activity level. To qualify for SSDI, you need to have enough work credits, which you earn by working and paying Social Security taxes, and you need to have a medical condition that meets Social Security's definition of disability. That definition is strict. Your condition must prevent you from doing any substantial work and must be expected to last at least 12 months or result in death. If you qualify for SSDI, your monthly benefit amount is calculated similarly to retirement benefits. It's based on your lifetime earnings record, but instead of using your age at claiming as a factor, it uses the point at which you became disabled. The average SSDI payment right now is hovering around $1,400 to $1,500 per month, though individual payments vary widely. Some people receive less than $1,000 per month, while others with high lifetime earnings can receive over $3,000 per month. The reset we're seeing right now includes the cost of living adjustment, so current SSDI recipients are seeing their monthly payments increase by the same percentage as retirement beneficiaries. But here's what's really significant about the SSDI reset that I don't think enough people are talking about. The substantial gainful activity limit has been adjusted upward. This is the monthly earnings threshold that determines whether you're working too much to continue receiving disability benefits. For non-blind individuals, that limit has gone up to over $1,400 per month, and for blind individuals, it's even higher at over $2,000 per month. What this means is that people receiving SSDI can now earn more from work without losing their benefits. This is huge for people who have disabilities that allow them to do some limited work or who are trying to return to the workforce gradually. You can test your ability to work during what's called a trial work period, which lasts for 9 months over a rolling 60-month period, and during those trial months, you can earn any amount and still keep your full SSDI benefit. Understanding these work incentives is absolutely critical if you're on SSDI and you want to try working again. A lot of people are terrified to even attempt part-time work because they think they'll immediately lose their disability benefits and then won't be able to get them back if the work doesn't pan out. But Social Security has built-in protections specifically to encourage people to try returning to work. There's the trial work period I just mentioned. There's also an extended period of eligibility after your trial work period ends, during which you can still receive benefits for any month your earnings fall below that substantial gainful activity limit. These provisions are designed to give you a safety net, but you have to understand how they work to take advantage of them properly. One thing that affects all three programs, Social Security Retirement, SSI, and SSDI, is the Medicare situation. Most people receiving Social Security Retirement or SSDI are also enrolled in Medicare, and their Part B premium is typically deducted automatically from their monthly benefit payment. When Medicare premiums increase, which they frequently do, it reduces the net amount that actually hits your bank account. There's something called the hold harmless provision that's supposed to prevent most people from seeing their net Social Security payment go down because of Medicare premium increases, but this protection doesn't cover everyone. If you're new to Medicare, if you're a high-income beneficiary subject to income-related monthly adjustment amounts, or if you have your Medicare premiums paid by Medicaid or a state program, the hold harmless rule doesn't apply to you. So when you're trying to figure out what your payment should be after this reset, you need to look at both the gross benefit increase and what's being deducted for Medicare Part B and potentially Part D if you have prescription drug coverage. Let me also address the taxation issue because this confuses a lot of people, and it's something you need to plan for if it applies to you. Social Security retirement benefits and SSDI benefits can be subject to federal income tax depending on what's called your combined income. This is calculated by taking your adjusted gross income, adding any tax-exempt interest, and then adding half of your Social Security benefits. If that total exceeds certain thresholds, $34,000 for individuals or $44,000 for married couples filing jointly, up to 85% of your benefits can be taxable. SSI is different because it's a welfare program, not social insurance, so SSI payments are never taxable under any circumstances. But for people receiving retirement or disability benefits, especially if you have pension income, withdrawals from retirement accounts, or earnings from part-time work, you could owe federal taxes on a significant portion of your Social Security. Some states also tax these benefits, though many don't. As your benefit amounts increase with these annual resets, you might find yourself crossing into taxable territory if you weren't there before. So it's worth running the numbers or talking to a tax professional to avoid surprises at tax time. Here's something that really doesn't get enough attention. Some people qualify for multiple programs at the same time. You might be receiving a small Social Security retirement benefit based on limited work history, but because that benefit is tiny and you have virtually no other income or resources, you could also qualify for SSI to bring your total monthly income up to the SSI federal benefit rate. Or you might be receiving SSDI based on your disability, but if you're married and your spouse is receiving retirement benefits, you might also be eligible for a spousal benefit. The way these programs interact can be complex, and understanding the rules can help you maximize your total monthly income. Social Security has rules about how benefits are coordinated when you're eligible for more than one, and it's worth understanding those rules because sometimes the order in which you claim different benefits can affect how much you receive overall. Let me give you some action steps because I don't want this to just be information. I want you to actually do something with this knowledge. First, if you're currently receiving any of these benefits, check your bank account or your mailed statement to verify that your payment has increased with this reset. Errors do happen, and if your payment didn't go up when it should have, you need to contact Social Security right away to get it corrected. Second, if you're receiving SSI or SSDI and you've had any changes in your living situation, your income, or your resources, you need to report those changes to Social Security. These programs require you to report changes that could affect your eligibility or payment amount, and failing to report can result in overpayments that you'll have to pay back later. Third, if you're approaching retirement age and haven't yet claimed Social Security, use this reset as a reminder to review your options and run the numbers on different claiming strategies. The decision of when to start benefits can have a massive impact on your lifetime income, and it's worth taking the time to understand your choices. If you're not receiving benefits yet, but you think you might qualify for SSI or SSDI, don't wait. The application process for both programs can take months, and you're not going to receive retroactive payments for months you could have been receiving benefits but didn't apply. For SSDI specifically, there's actually a 5-month waiting period after you become disabled before benefits can begin, so the sooner you apply, the sooner that clock starts ticking. For SSI, benefits can start as early as the month after you file your application if you're found eligible, so timing matters. Gather your documentation, including medical records for disability claims, proof of income and resources for SSI, and your work history for any Social Security programs, and get that application submitted. The bottom line is this: these resets happen every year, but that doesn't make them routine or unimportant. The adjustments that just went into effect represent real money in your pocket, and understanding how they work and what they mean for your specific situation is essential. Whether you're already receiving benefits and need to understand why your payment changed, or you're trying to figure out if you qualify for a program you didn't know existed, taking the time to understand these systems is one of the most valuable things you can do for your financial security. These programs exist to support you. Whether you've worked your entire life and earned those retirement benefits, you're struggling with a disability that prevents you from working, or you're living on very limited income and resources. Don't leave money on the table because you didn't understand the rules or thought you didn't qualify. Check your eligibility, verify your payments, and make sure you're getting every single dollar you're entitled to receive.